this is the reason I don't look for any yield, because a 100% return to get a 10% yield, I'm like, most of these things go up and down 10% in a day. So I don't think you get compensated for the risk in yield. So I've always kept away from yield.
Hey guys, welcome to the Daily Crypto. In today's video, we have Raoul Pal as he explores the price volatility of the cryptocurrency and how a long-term crypto investment strategy is the way out of volatility concerns. Prices of cryptocurrencies, including Bitcoin, have been falling in 2022 amid a worldwide crypto price crash, as it varies due to supply and demand, investors and user attitudes, government laws, and media excitement. All of these variables contribute to price volatility. However, Raoul Pal remains unbothered and headstrong that cryptocurrency is a good investment when considered on a long-term basis. The cryptocurrency market is expanding quickly. This isn't exactly breaking news. I'm sure you've heard both sides of the coin, so to speak. Cryptocurrency has created queens and paupers. However, such gains and losses are not always the result of victors selecting excellent coins and losers selecting poor ones. It is conceivable to speak with two persons who both invested in Dogecoin, but one lost money and the other profited. Timing may determine whether you win or lose. This is due to the fact that Bitcoin is an extremely volatile instrument. All cryptocurrencies face massive changes in their worth. Cryptocurrencies are very volatile instruments with daily price fluctuations. This element makes long-term investing tough, but it might also provide additional short-term investment possibilities. Let's have a look from Raoul Pal's perspective and have an idea to profit from these price fluctuations in 2022. Hit the like and subscribe button if you enjoy the content we do here on this channel. With no further ado, let's get right through the video.
No, because it's an exponential trend, so therefore it's risk-adjusted returns. If you don't see it in that term, you shouldn't be in the space, I guess.
Yes, exactly. So weathering massive volatility, even on your winning assets, is critical.
Cryptocurrency volatility is an inherent issue in this market and one that every cryptocurrency investor must deal with. This is due to a variety of factors. For starters, because they are new technology, they are more vulnerable to larger upward and negative fluctuations due to investors' inadequate expertise. Because it is an unregulated market, the price is vulnerable to a variety of external factors that might have a substantial influence on its value. At the same time, cryptocurrency investments have a strong speculative component, making these assets more susceptible to excessive market price volatility. Most factors that contribute to the price volatility in traditional markets also apply in the crypto markets as well. The price volatility in both markets can be linked to news of developments and speculations. However, their impact is very well noticed in the crypto markets, which are known to have a weaker liquidity than in traditional finance markets, as a result of the cryptocurrency lacking a solid ecosystem of institutional investors and trading organizations.
Yeah, it's interesting because I launched this fund-of-fund business, and we had two share classes. One is a 1-year lock and one is a 3-year lock. 95% of people choose a 3-year lock, which is quite rare in other parts of the fund industry, because people are learning that they are their own worst enemies and they need to be stopped from doing the wrong thing. They just need to close their eyes.
Amid the crash in cryptocurrency, Raoul Pal predicts that there would likely be mass adoption of crypto worldwide, as crypto wallets and addresses are growing on a yearly basis of 185%. 2022 was not the best year for crypto assets. Meanwhile, the crypto market has collapsed 10% to $205 billion. However, the new trend of investing in eco-friendly coins is gaining momentum. In May 2022, coins such as Solana and Cardano outperformed Bitcoin by 27%. This shows that investors are also keen to invest in new eco-friendly coins.
So now we're in the midst of a large drawdown in crypto assets, and I presume you're having a drawdown along with the market. What do you think? Do you start trying to get people to put money into this? I mean, these are the times. Now, whether it goes down another 20%, it's irrelevant, right? But this is what you look for, because this is what drives returns, is your actual entry price. That's really what's driven your return so well, is you've been really early. Everything's further out the risk curve has been absolutely destroyed in price. Nobody wants it. And at that point, you're going to sift through the wreckage and see if there's anything interesting. So we're not talking about stuff that's not launched yet. You're talking about stuff that's out already, so tokens that are trading.
The market has dropped by more than 50% in the previous month, making it difficult for cryptocurrency investors. This dip might also be linked to the recent Luna Terra episode, in which the price of Luna fell to zero, resulting in a black swan event that led to a loss of faith among investors and whales, who were fast to sell off their digital assets, finally leading to a market crash. Understanding cryptocurrencies sooner rather than later can make the transition easier for everyone. The initial wave of Bitcoin users, like those who embraced the internet early, will have an advantage over the second and third waves. So where precisely are we in the cryptocurrency adoption cycle? Let's hear what Raoul Pal has to say about this.
Yeah, I totally agree. This is the reason I don't look for any yield, because at 100% return, to get a 10% yield, I'm like, most of these things go up and down 10% in a day. So I don't think you get compensated for the risk in yield. So I've always kept away from yield just from that same thesis. And, I also don't trade it. I don't sell it, don't do anything in it. I just keep the position and hold it for as long as possible. I was looking at the numbers on this and just updated it last week, is that the crypto wallets and active addresses are growing at 185% a year, which is still twice the speed of the internet. So what we did is we took both the internet and crypto with 5 million users, when they both got the same age, put them on the same axis. I mean, crypto is twice the speed of adoption. We've literally never seen a technology be adopted this fast.
Yep.
And the people forget exponential numbers because we're at 300 million users now. If we go up just 100% next year, it's 600, and then it's 1.2 billion.
With that in mind, it's safe to say that we are still in the early stages of cryptocurrencies. Despite the massive valuation of Bitcoin, Ethereum, and a few other cryptocurrencies, the data suggests that there is much room for growth. With each passing year, new developments are born from space, capturing the hearts and wallets of people around the world. Most cryptocurrency market observers will agree that crypto volatility is out of this world. There are no indexes to gauge crypto price volatility, but a brief examination of historical price charts reveals that rising peaks and depressed bottoms occur at a faster and more dramatic pace in crypto prices than in asset values in conventional markets.
Everything I'm saying here, I say to all of my investors all the time. I remind them of my view, and I remind them that my view is really not going to change, right? We're not going to see a 50% drawdown and all of a sudden, we're long short, right? My view is going to stay the same. And until I have like a really big change in thesis, right, we're never going to change the approach, right? And the thesis so far has played out correctly. And I don't see any indication that...
You should also keep in mind that the value of numerous cryptocurrencies is determined by the price of Bitcoin, the industry's benchmark cryptocurrency. As a result of Bitcoin's volatility affecting the whole crypto industry, a few significant swings in one cryptocurrency enhance the price volatility of all other cryptocurrency.
But what happens if a certain token or protocol is not getting network effects? You've got it, your core thesis is wrong. How do you get to the point where saying actually might be wrong, or do you just say...
Being affected by the massive plunge in crypto price, do you still believe Bitcoin is still a good investment? With a buy and hold approach, do comment below your thoughts. And if you have found the content helpful, don't forget to give this video a thumbs up and do subscribe to this channel for weekly content like this. Thanks for watching. Don't forget to remain positive. See you in the next video. Until then, goodbye.